All right, folks, welcome back. This is the daily log entry for March 9th, 2021. We'll be looking at the dollar index, euro dollar, British pound versus US dollar on the 15-minute time frame. And we'll be doing our homework review, and I'll give you another homework assignment. All right, here's our dollar index, 15-minute time frame. It's a naked chart, no annotations. Set your chart up like this. Then on your chart, annotate what is salient for this given day. All right, I'll show you the annotations now. All right, so you can see we returned back to that weekly gap opening at the midnight hour on March 9th. We had a small little movement above the opening price back into a bearish order block. An eagle eye would also notice that is an optimal trade entry. From the high to low, back up in at the beginning of London open into the bearish order block, buy side liquidity taken. We have a small little swing low here, and when it broke, that is your shift in market structure. It moves lower. Moving on into the New York setup, we swing from this high to this low, back up in, fair value gap, New York open, kill zone, optimal trade entry, sells off, goes into the order block mean threshold. That's what the OBMT stands for. And we have sell side liquidity pool resting relative equal lows, traded back up into and potentially lower. The London close was really of no importance today. The high forming ahead of New York midnight. You want to look at the November 16th and 17th daily volume imbalance on the dollar index, and it'll be brought up in the midweek review. All right, here is the 15-minute time frame naked chart on euro. All right, and here's the annotations. All right, here is our swing low ahead of the midnight hour. Creates a small little swing high here. Optimal trade entry dropping down into London open kill zone. We also have a breaker here. So I have the low, high, lower low, clearing sell side liquidity. Optimal trade entry forming low of the day, rallies. Reaches up into a rejection block, and you'll have to go back over here in the left side of your chart to find out what that rejection block is. New York open kill zone just has a retracement back up into a bearish order block, trades down to rejection block, which is the lowest closing price here. Small little fair value gap, but there's a lot of wicks in here. Notice that? So whenever you have this type of price action, just refer back to the nearest order flow here. Don't try to figure out anything over here, because apart from this fair value gap, there really isn't anything over here the frame on. So you have to work with the rejection block in here. It'll be interesting to see if we continue rising up and attacking the buy side liquidity above here. British pound versus US dollar, 15-minute time frame. This is our naked chart. All right, the annotations now. All right, so you can see we have the midnight hour, New York time. Swing low ahead of that, swing high, drops down in for a Judas swing, which is the opposite of the daily range anticipated direction. London open, rallies up, buy side unbalanced, sell side inefficiency, crosses over the 15-minute fair value gap that I showed you yesterday, came back in, rallied one more time, back into the discount level of the fair value gap. Then it creates another optimal trade entry. So we have low, high, low for OTE in the New York open, then rallies. Buy side liquidity resting above these highs here. 20 pips sweep takes us up into here. Retraces back down into the order block here. It'll be interesting to see if we rally through this high as well into Asia. All right, here's our homework review. This is the S&P June 2021 contract. This is a daily chart, and I gave a lesson on my Telegram channel yesterday for free, and you're going to see the difference between that and this. So we have a range high, range low, and then we have the mean threshold of this bullish order block. That's the midpoint of this candle. So from the low to the high, the Fibonacci 50 level extended out in time. Trades into that for optimal trade entry there. Okay, so given what we're looking at here, once we trade in optimal trade entry here and starts to rally up, even though this is a bearish order block, this is a short-term resistance. This is a short-term support. So we have the bullish order block and the bearish order block within the context of a larger discount market that's rallying. So if it was in a discount and it's starting to rally, where is the liquidity it's likely to reach for? Above this high or the rejection block here. Dropping into the hourly chart, you can see we have that daily bullish order block level and the bearish daily order block. We have a buy-sell liquidity pool resting above this short-term high. Market drops down into 60-minute fair value gap perfectly. Rallies up. Small little imbalance here. Creates a fair value gap as well with an order block. Trades back down in after hitting the bearish order block level that was outlined on that daily chart. Price trades down, overshoots the fair value gap, but goes into what we would be looking for is the order block. Now this is actually a propulsion block, and this is the order block. So an order block that's on top of or trading into a previous order block, that's propulsion. Okay, you don't want to see these types of candles. You don't want to see the 50% of that level broken. And you can see we trade down into it, but it doesn't break and close on a lower level than half that down close candle there. Okay, you'll learn more about propulsion candles. Market rallies away, small little retracement, rallies again, back into the order block here, and then off to the races we go above the buy-sell liquidity here, and in sync with that higher time frame daily optimal trade entry. All right, let's go down to a 5-minute chart. All right, so we have a 15-minute breaker. Now I skipped over the 15-minute chart because I want you to go in to yours and find it. Okay, it's very simple. It's the last up close candle on the 15-minute time frame prior to the decline. We have a retracement into that fair value gap here with this inside that 15-minute breaker. We have a sell side liquidity pool here, trades down into that and back into the order block here. Optimal trade entry. Rallies. We have a breaker here. We have a low, high, lower low, which takes the sell side. Last two up close candles, project them in the future, and then we have a buy side imbalance, sell side inefficiency overlapping inside of that breaker. Market rallies, comes back down in. Optimal trade entry here. Rallies, falls short of the order block, retraces back down into a volume imbalance here. Rallies and hammers the bearish order block. It creates a buy side liquidity pool with relative equal highs. Sells off. Market structure shift here. Sell side imbalance, buy side inefficiency. Retrace, sell off. Institutional order flow entry drill. Bearish order block. SIBI. Sells off into and completely closes in the imbalance and back into the breaker here. And higher prices would be expected after that. All right, here is your assignment for tonight. Your homework is to find the following. In this chart for a 15-minute time frame, Australian dollar versus US dollar, using the Forex.com feed on TradingView. Don't use your MT4s, okay? Don't use your live accounts. Use the data on TradingView. Try to set your chart up like this one. And you're going to be looking for a bullish breaker. Find a redelivered rebalance. Find a rejection block. And find optimal trade entry. And I will review this in the Wednesday midweek review. Until then, be safe.